Hello, everyone. Welcome back to the BTMD podcast. We're your hosts, Shashank, Sawmil, Puni, and Srihari. And today we're going to be discussing how individuals and the government can help improve the current student loan system, as well as some of the effects of the current system.
Student loans, a topic that's been discussed in headline after headline, and they're supposedly a beacon of hope for those who wish to pursue higher education without the financial means to do so. But the reality of the situation proves to be far less optimistic than this perception. Well, you guys might be wondering why this matters to you and all the other students in the United States, right? Well, according to Spencer from Money Under 30, a reputable personal finance website, today, 67% of all college students go through the process, regardless of their degree. And many people still don't understand the full extent of how these loans may end up shaping the rest of their lives. So there's a massive chance that 2 out of 3 students listening to this podcast will eventually go through this process. And we want to educate you guys so you're not in the same situation millions of others are in. To start off, we're going to give you a brief overview of the entire student loan system. First, millions of students obtain loans to pay for their education, and there's an interest rate on these loans, with the average interest rate being a tremendous 5.8%. And as students start the application process, the majority opt for a federal student loan. And according to Holoski from NerdWallet, the federal government controls over 90% of all student loans. This then stems into a massive problem, which we're going to touch on later. And the result of the broken system is generations of workers whose career options and life decisions are being shaped by their indebtedness. And we don't want you guys listening to be part of the situation. And so, what are the roots for this problem?
As with any problem, there are going to be multiple different causes. Most of them revolve around malpractice by the big banks. According to the Los Angeles Times, a reputable business newspaper, when investigating the large student loan servicers, representatives at several companies provided insufficient information to borrowers, lied to them to encourage borrowers, by explaining false benefits, to use payment plans with higher interest rates rather than those which specifically benefit the borrower. And you can't really fix this because of the power that they hold. First of all, they have a lot of money, so they have a monopoly. Because big banks hold so much wealth, they're able to loan out these massive amounts of money for college students without the risk of going bankrupt. Even though there's a staggering $1.6 trillion in the student loan debt system, only, quote, one company handles close to half of all student loan payments. In addition, they also have a lot of lobbying power. Their massive wealth allows them to have extensive lobbying efforts in government to avoid being held accountable for their malpractice. Quote, the education department rejected much of their criticism, and loan servicers were, quote, not obligated to change any of their processes by the federal government. This is from Jillian Berman from MarketWatch. This puts students in a state without any control, where they have to submit to unfair contracts in hopes for a college education, or miss out on college, a necessity in today's rapidly advancing world. What do you all think the effects of this current system are?
As student loans continue to increase, many students are left in a cycle of suffering. Private tuition rates have more than doubled, and public tuition has more than tripled, while the average federal wages have not changed significantly. That's from Farzan and Spencer. As wages fail to increase across the board, more and more students are being left unrepairable, and our loans are being left unrepairable, leading to long-term complications. For starters, massive student loan debt can harm your credit score, harming the ability for students to access additional loans and other forms of capital needed. In addition, paying student loans has long-term complications on the US economy. If students can't pay off their student loans, they don't have enough capital to start a business, start a family, or buy a home. These complications can lead to further deterioration of the economy.
That's all true, but on the flip side, I think there's also an argument to be made that student loans in the status quo actually do have several advantages. I mean, for starters, loans help students of low financial status obtain higher education. According to Jillian Berman from MarketWatch, this has helped us create a system where hard work is rewarded, which has also been beneficial to the prosperity of our nation as a whole. And although loans can certainly be hefty and they can build debt, if they're fully paid off, they can reflect very well on someone's credit score, which is an often overlooked aspect of the entire student loan debate. And as we know, having a good credit score at a young age can have a variety of benefits, including larger purchasing power and the ability to obtain larger loans in the future. However, I guess just simply the risk of taking on a student loan in itself is extremely high. So the risk of not being able to pay off the loan should honestly outweigh any potential benefits of a raised credit score. With that being said, what should the government do? And more importantly, what can students do so they don't face the same harsh reality as millions of other students who've already taken student loans?
Before we talk about our proposed solution, let's talk about all the potential options. Obviously, in the current system, loans are issued by the government, and it's the individual's responsibilities to manage and repay their loans in a wise manner. But there are also some other options, getting loans from alternative sources such as smaller loan firms. However, according to Ellen Zenter from the New York Times, this wouldn't be such a great idea because smaller firms won't have enough capital to compete with the federal government, so they'll likely have higher interest rates, which then adversely affect students.
The solution to improve the student loan system and to make the lives of future students easier, the student loan system must be thoroughly reformed to prevent further corruption and student suffering. Step one is that the federal government must impose a stricter set of regulations in which the student loan servicers are forced to be transparent and liable for their actions, including required recordings and documents of discussions and advising sessions with students to eliminate any potential manipulative servicing practices.
Furthermore, stricter punishment must be enforced if these servicers do not comply. Servicers should also be required to completely finance current loans if they've misled students in the past over repayment plans, especially if these plans don't particularly benefit the student while generating more revenue for the servicing company. The federal government should also provide free resources to help educate students to help understand the difference in student loan plans. For example, things such as issuing free online pamphlets and making a website dedicated to explaining the differences wouldn't be too hard to implement and would have a significant difference. And the implications of this would then help students and the economy in the long run as they spend more towards things such as property, marriage, and more, rather than repaying a loan which wasn't actually beneficial to them.
By implementing all the preceding ideas, student loan debt would be mostly alleviated, and student loan servicers would be hesitant to intentionally mislead students applying for loans. Now, potential limitations of the solution would be widespread unwillingness of the federal government to change their practices. Also, federal banks may not want to cooperate with the federal government, considering that the solution will certainly limit the bank's power and authority. Now, for individual based solutions, we're going to need everyone for this because the better the education we get, the better we can fight back. Most individual based solutions revolve around better financial education. This includes learning about the financial system in middle school, high school, and even the summer right before you apply to college. This can include learning about the federal government, how the banks operate, and specifically how the student loan service operates. In addition, you should be able to monitor your accounts and have good oversight in order to mitigate any potential threats or increased debt or changes in loan interest. There are some limitations to this, especially since big banks can often monopolize people who do not participate in this program.
Hopefully, this information helps you consider how student loans will affect your future. Thank you for listening today, and we'll see you all next time.